welcome to the second episode of my Rohit Sharma podcast. I'm your host Rohit Sharma. Today we are going to dive into the one of the biggest concern in real estate market, mortgage affordability. Interest rates are decreasing, economic conditions are unstable, prices remain high. What does 2025 have in store for home buyers and investors? Let's break it down and look at it from the historical perspective. We will break down from the year 2000 to 2024 and see how different economic conditions have shifted the prices and the real estate market over the years. It is very important to understand what has happened historically in different conditions and different interest rates. This will help us to analyze and discuss what is ahead for 2025 based on the current market and economic conditions and the global trends. In order to understand the trends for 2025, we need to divide real estate market from 2000 to 2024 and dig deep and see how market has behaved in different conditions. So first of all, I will explain you a broader picture from 2000 to 2024 and explain how market has shifted over the years. So let's look at the graph and see how prices, home sales, interest have affected the real estate market in the Fraser Valley. Back in 2000, about 6,300 homes were sold with an average price of around 230,000. Fast forward to 2024, sales are slightly lower. Only 5,200 homes were sold, whereas in 2000, 6,300 units were sold. But prices have skyrocketed around 1.46 million. That is more than 6 times the price in just 24 years. You have seen the prices have gone 6 times in 24 years. It's very important to understand how real estate market in Fraser Valley have behaved for the last 24 years. Next, I'm going to discuss from 2000 to 2007 and how Fraser Valley real estate market for detached home behaved. So let's see graphically. In 2000, about 6,300 units were sold with an average price of 233,000. In 7 years, interest rates remained low, fueling a real estate surge. By 2007, home prices had more than doubled to 488,000, with the sales still strong at 10,000 units. The market was thriving, driven by low borrowing cost and high demand. One thing we have to understand that from 1990 to 2000, home prices remained stagnant. That also doubled the prices from 2000 to 2007. Next came the world financial crisis in 2008. This crisis shook the US real estate market. House prices came down crashing, banks failed, widespread foreclosure. We will discuss Fraser Valley real estate market from 2008 to 2014 and see how it got impacted. Let's go through the next chart from 2008 to 2014. Canada's stricter lending policies helped keep prices stable. Sales dropped to 6,700 homes sold in 2008, but record low interest rates of 1.25% from 2000 to 2014 kept prices from crashing. Still, unlike the earlier boom, prices grew much slower, fluctuated between 498,000 to 585 during this period. One thing we have to notice here that unfavorable economic condition kept the prices from rising. Very little price increase happened. Then from 2015 and 16, a big explosion came in the real estate market in Fraser Valley and Canada. Whereas the world was still reeling under the financial crisis of 2008, Canadian home prices skyrocketed and doubled during 2015 and 16. Next chart will explain you how home prices and home sales behaved during 2015 and 2016. Sales surged past 11,700 units. Prices nearly doubled from 650,000 in 2015 to 910,000 by 2017. This was fueled by ultra-low 0.75% interest, foreign investment, high demand, but by 2016 to 2019, rising interest rate, government intervention like the foreign buyer tax, mortgage stress test, cooled the market. Sales fell sharply to 6,100 homes in 2018, while prices remained at 970,000. They corrected slightly to 944,000 by 2019. The COVID-19 pandemic initially slowed the residential real estate sales due to lockdown and economic uncertainty. But the real estate market quickly rebounded as record low interest rate, government help, and working from home fueled the demand. Bidding wars became common and the prices of the home skyrocketed to the highest value as buyers were looking for more space and upgrading from their condos and townhomes. However, as Bank of Canada started to raise interest rate in March 2022 in order to curb the inflation, which resulted in decline in affordability, leading to a market cool down, slow in sales, and little price correction. In the next graph, we will discuss how real estate market changed from 2020 to 2024. The COVID era boom from 2020 to 2022 with interest rate slash 2.5%. Buyers rushed in thinking rates would stay lower forever. Home sales jumped to 11,500 units in 2021. And prices skyrocketed from 930,000 in 2019 to 1.6 million by early 2020. However, as Bank of Canada hiked interest rate to 4.5% in 2022, sales dropped to 5,400 units and price corrected to 1.45 million by 2023. Even in 2024, with the rates easing to 3.5, sales remained weak at 5,200 units and price barely moved to 1.46 million. So what does it mean? The data we discussed shows that though the sales have fluctuated, but the prices remain high even in 2024. What has been widely discussed that why prices are high, it is due to the growth in population, limited supplies, and economic shifts. However, the affordability has never been worse, and high mortgage rates continue to keep the demand low. Now, looking ahead at 2025, we are facing economic uncertainty. While interest rates are coming down, wages are stagnant, home prices are high, and global economic pressure could still slow the demand. New tariffs by the US are still being implemented, and everybody is still analyzing and discussing how it's going to impact the Canadian economy. Tightening immigration policies, softening the rental demand, leading to softer rental prices. For investors, the strategy is shifting. It is no longer just expecting price growth. It is about understanding affordability trends, rental income potential, and long-term appreciation. Primary home buyers are looking at the affordability. Even for the last 24 years, The real estate market of Fraser Valley has demonstrated resilience over the years. Further performance of the real estate will depend on the movement of the interest rates, economic stability, and evolving buyer behavior. Whether the real estate market shows continued momentum or renewed momentum, staying informed and adaptability will be the key for sound real estate decisions. In our next segment, we will have a closer look at the real estate market for the first 2 months of 2025 and explore what trends could be for 2025 for both investors and home buyers. This will help us understand how market is shaping for the rest of 2025. That is it for this segment. If you found this segment helpful, subscribe, leave a review, and share it with others who are interested in real estate. Thanks for tuning in and see you soon next time.